Hi, this is another episode of Treasure Valley NIA QuickTips. Scott Marker here as your host. And how this came to be is I'm a franchise owner of a network and action franchise. It's a once a month professional networking group. We're out of Houston, Texas. We're all over the United States now and in 4 or 5 countries. And it's just people like me that like to connect with high caliber local business professionals here in your area, which my area here is Treasure Valley, Idaho. So today is a perfect example of bringing on somebody that has a lot of expertise on something I've always been interested in, which is reverse mortgages. So, Dona, introduce yourself.
Hello, Scott. Thank you for this opportunity. Um, I'm Dona Jeka with Clear Mortgage. I have been in the mortgage industry as of this year, 2025, a total of 30 years.
Wow.
And I love what I do. Love working with all types of buyers and homeowners, but I have really developed a passion for the senior community and the reverse mortgage world.
Perfect. Yeah, there's just a lot of I'm a perfect example because I I know I just don't know a lot about reverse mortgages, but back I don't know the the big downturn with the real estate market in 2007. I don't know. I don't know what it was. I just know that I kind of heard some negative things about it. So that's another reason why I want to bring you on is just to kind of like explain. So is there, I mean, I mean, has there been any over the lifetime about how long have reverse mortgages been around?
Oh my goodness. I think the first reverse mortgage was done in the 80s.
Yeah, they're old. So
Yes.
what now fast forward till today, what's is there anything different over the years like now that you're doing them than they used to be done in the past?
Oh, a ton, a absolute ton. And back in the early days, if you had one scene, so you have a couple, and let's just say Mr. is 65 years old and wife was 55 years old, and they did a reverse mortgage. The wife was not on the loan anywhere. And then if senior passed away, wife got kicked out of their home.
Wow.
Unless she could afford to buy it. All of that has, and those are the headlines that so
Yeah.
many people remember. And it has been completely revamped. Um, Most recently, 2014, I believe, FHA went through and they actually lowered the percentages that people could get out of their home because people are living longer.
Yeah. Yeah.
So you cannot have a married couple and not have them both on the loan. So even if one of the seniors, husband or wife, is under 62, they will still be on the loan as a non-qualified spouse.
So there was but my next question, excuse me, is ages. What ages do you have to be?
You have one of the
Two.
borrowers has to be 62.
Okay. Okay. So you could have one being
That's
62, one
in,
being
that's in, oh, I'm sorry.
no, I'm just saying one can be 62, one could be 59.
Absolutely.
Okay.
Absolutely. And
Okay.
that's in Idaho. In other states, there are some proprietary loans that we don't qualify yet here in Idaho for because the our property values are average, not a million plus, but
Okay.
those areas where the average price is a million plus, there are some proprietary products, but not here in Idaho.
Okay. So again, like I said, this is a layperson, so you're going to be talking to both probably people that have a clue, helping them out, but also people like me that just all I've ever heard about is the negative things way in the back, and so I know nothing. But like, So how, like, on a reverse mortgage, I mean, so and I've heard this from you, Ford, Ford mortgage and backwards mortgage, Ford. So are you, let's say make it easy. You have the house paid all the way off and you get my wife and I get a reverse mortgage and want a little bit of extra cash money. Is that, I mean, is it, how's that different? I mean, are you, are you just taking money away from, I mean, or explain that part, how that works? Because that's a part of
Okay,
my brain I don't see how, where does that come from? And then, does the bank own your house?
okay. So your first question. No, well, no, your second question
Yeah.
first. No, the bank does not own your house. You have a mortgage just like before you paid your home off, assuming you didn't pay cash for it.
Okay.
Assuming when you paid that mortgage off, you were now mortgage free. A
Right.
reverse mortgage is exactly that. It is a mortgage on your home. The home remains in your name.
Okay.
Never will it uh, move from your name
Okay.
until it
So,
is sold, or yeah, until it's sold.
okay. So is that like, I mean, is that like you're just getting another mortgage? Is that what it is? You paid it all the way off and you're just getting another mortgage in your house?
Yep, that you never have to make a payment on.
Right. Wow. Okay. Um,
So it allows you the flexibility. There's many different options. You can have the reverse mortgage pay you a monthly income. You can get some cash out right out the gate for, at closing. Maybe you take 50,000 because you want to do some home improvements, or you are anticipating a large medical expense or something. Okay, so you can take, let's just say your home is worth 500,000. That's about normal for the Treasure Valley. And so you have a $500,000 home. You take 50,000 at closing. The closing costs are paid for through the loan. And then you have a line of credit that is growing at approximately 7% per year, that allows you more access to more equity over time.
okay.
You might be able to get a total of 100,000 at closing with some caveats. This is it gets a little complicated,
Yeah. It's
and
like
it's
everything.
much
I know.
more,
Because every
yeah,
situation is different, but this is kind of like real high
exactly.
level. Yeah.
Yes.
Yeah.
So anyway, it gives you that line of credit that 5 years from now, you decide you want to take your family on a cruise of a lifetime, you pull another 50,000 off of the line of credit. And whatever line of credit is remaining continues to grow at the same interest rate that the borrowed money is growing.
Okay.
It's much easier to explain on paper, but
Yeah. Yeah. Um, if so, now you have a married couple, and one of them passes away, and then the other one is just a trooper and lives to be 100, and so they um, exhaust all the monies out on the reverse mortgage, so they take out more money than the house is even worth.
that
So,
is not possible.
oh, there's not, okay. So how does that work?
So
Give
the
like an
line of,
example of
they
like
may
give.
use up the line of credit,
Okay.
but they will never, if they live to be 110, that reverse mortgage stays in place. It never has to be paid back until both borrowers have vacated the property,
Okay.
whether that means going to their forever home
So
in heaven, or into a care facility permanently, that sort of thing. At that point in time, and there are some, they have to keep property taxes, homeowners insurance, and HOA dues current. But the reverse mortgage itself will last as long as they do.
Wow. So again, just to help me clarify here, so let's say that you have a $500,000 home and I want $1,000 a month. And but my house is paid for, so I have like a lot of equity in my house, and I want that $1,000. Um, and I just keep getting $1,000.
That will run, the 10-year payments will run out. The estimates last till 100
Okay,
years of age.
okay, okay. But it's just another, I mean, another way somebody can pull out some extra money and to supplement their income.
Correct, correct. And it's all dependent on the age of the borrowers and actually the age of the youngest borrower and the value of the property
Perfect.
is
So,
what determines how much you can get.
so if so again, you talk about taking out that money like that, $50,000. Let's say that you have a senior company, a senior couple, and they're 75 ish, each, and they do a reverse mortgage, but all of a sudden they got some friends saying, something, you should go in with us on this duplex, fourplex. Can they take monies out like that again and use like
If they
fif-
have it, it's all dependent on how much is available in
okay.
their line of credit. Yes.
But if they qualify for it because their house is worth $1 million, but it's all paid off, so now they want to do a reverse mortgage to pull some money out to buy a rental, and does
Yes.
that count against them on their taxes?
No, the rental income would,
Okay.
but any monies you receive on a reverse mortgage are not taxable.
Oh,
It is borrowed money, so it does not affect your income whatsoever.
now that's really good. I mean, that's really a good thing because, like I'm saying, if you're pulling another $1,000 in, anyway, that's really good. So that doesn't
Yeah.
the IRS just. I mean, you probably have to report it, but they don't count that against you, like your income coming
No,
in.
there's actually no reporting. There's no interest write-off,
Oh,
like because you haven't paid the interest.
oh,
Now you can make payments on a reverse mortgage,
okay.
but you don't have to, and most people don't.
So here's a scenario. So let's say I this couple needed it for 5 years, right? And to get them by for some reason, and then at 5 years they stopped doing it. Now,
They stop doing what?
excuse me, they don't need the money anymore. They do a reverse mortgage. They want to do it for 5 years, and then how how do they now do they and they want to pay that money back or something like that? Can they? How does that work? I mean, do people ever start a reverse mortgage and then stop it? I mean,
They do. Well, I'm sure that there are people who have paid it off and closed it, but you lose the flexibility. So let's say you owe 50,000 on the HECM, on the first mortgage, and you have a line of credit worth 50,000.
okay.
Okay. If you close all that, you lose that flexibility of that line of credit. You
Oh,
would
okay.
only have to pay back the 50,000 if that's your loan balance.
Right.
But that line of credit is an amazing tool that yes, the balance on that 50,000 that they owe on the regular is going up by approximately 7% per year, whatever the interest rates are, okay? And plus the monthly mortgage insurance premium. But
Right.
anyway, approximately 7%. But that line of credit is also growing. Now, the difference with some people will get a home equity line of credit for just something to fall back on in case they need it. When and if the market crashes, what's one of the things the banks do almost immediately? They freeze those home equity lines of credit.
Oh,
So you cannot access more money from them. The reverse mortgage line of credit is guaranteed to continue to grow into perpetuity, or as long as you're in the house,
right,
perpetuity,
right, right.
and it will never be frozen and it will never be closed.
That's a big difference because, like I said, again, not me. We just listening back to some people during the collapse and all this stuff had HELOCs and everybody. That's exactly right. Some of them got they got them frozen. They weren't
Mhm.
allowed to access them anymore. So it's like, yeah, yeah. So that is a huge thing. So is there any um here we'll wrap this up here. Is it questions? What is there any? Give it like a scenario that you've like helped some people out and with a reverse mortgage that you were like they were happy and you were happy for them and how that story worked.
Oh, there's been several. The most recent one was a gal who had recently lost her husband. Her Social Security was bumped up a little bit by his passing, but not much. And she was basically living on $1,700 a month. Her mortgage payment was just a little under $900 a month. But she was struggling to put decent food on the table, pay her utilities, put gas in the car, things like that.
Yeah.
We were able to do a reverse mortgage, get rid of her $900 house payment. We gave her a line of credit of $52,000. She took 15,000 at closing because she wanted to do a few home improvements. And she now has the security and the plan. Her plan is to only access her line of credit every year for to pay her property taxes and her insurance. But we're also setting her up with the county to get the circuit breaker tax exemption, which is something that is provided by the Idaho counties to reduce your property tax liability to almost nothing
Wow.
dependent on your income. And remember, income from a reverse mortgage, proceeds from a reverse mortgage do not count as income.
Wow. That's awesome. Well, this has been great. I mean, it's like anything. There's so many different scenarios. I mean, as a mortgage broker, I'm sure people will go. So, what are interest rates right now? You can give a range, but there's so many variables. But this has been helpful to me because, like, probably one of the biggest things is that he kind of the difference because that was one of the things. Why don't I just do a HELOC? And then you're right because I remember back I had some friends saying, "What the heck? How can the bank do that?" And they did it. So
Yep,
that's a big difference. No,
yep,
this has been super helpful because, like I said, all I know about him is all the things I've heard negative about the years and all that stuff. So this has been super helpful, and I appreciate it. And uh, you know, I hope the listeners will also benefit from it too. Because, like I said, reverse mortgages are just going to become a bigger and bigger thing because people are living longer.
yep.
you know,
That
and
is very, very true.
right. So, hey, I appreciate being on here. And until next time, this has been another episode of Treasure Valley NA Quick Tips. Thanks for listening.